The Federal Reserve decided not to raise interest rates in their most recent meeting and said that they could cut interest rates 3 times in 2024. So what does that mean for investors? What does it mean for people who are saving? And what about people who are considering trying to buy a home next year? Let's go ahead and break it down. Anytime the Fed decides to cut or raise interest rates or just frankly pause interest rates, this does have an impact in the economy, and it usually has a pretty quick impact as well. Yesterday we found out that they weren't going to raise interest rates, and then we saw the stock market rise again today. And in fact, yesterday we also saw another record high. It's actually the first record high we have seen in the stock market since January or so of 2022. It has been quite a while, but the stock market is officially back. But what does that mean for 2024? Because every year is different. Well, here's the thing. Generally speaking, history has showed us that when the Fed cuts interest rates, the stock market does tend to rise. And that is because money gets cheaper, people are able to borrow more, which means they're able to spend more, which means companies are able to make more money. That's the very general principle of it. And usually speaking, it's tech companies that start to see the biggest growth because they are the biggest investors, because they're trying to invest more in AI and all this machinery and technology, and they borrow a lot early to attract investors, to grow the company, and then try and become profitable down the line. That's how Amazon, Netflix, and tons of other companies got as big as they are today, because they borrowed money in an era where money was extremely cheap. That's how they did it. So, looking at history, we would expect that to be a similar path in 2024. However, this could be a good thing for investors, but I'm not so sure it's going to be a great thing for savers, and I really don't think it's going to be a great thing for people who are looking to buy a home, even though that does sound counterintuitive. So for investors, I think you're fine. Continue investing in index funds. If you're insider members only, this weekend we're actually going to drop a top 10 list of the best stocks for 2024. It actually probably be a little more than 10. I hope that's okay with y'all. So you want to make sure that you check out our members only. It's only $10 a month. But aside from that, for savers, what tends to happen when the Fed decides to cut interest rates? Your savings rate is likely to drop. We have talked about earlier this year how we had savings accounts that are paying 3, 4, close to 5%. Well, those things are going to change, and you're going to start to see that at some point in 2024 if the Fed does go through with what they say and cut interest rates. So we're going to see what happens there. That doesn't mean you shouldn't stop saving. It doesn't mean that you shouldn't continue to put money into your savings account, or that it's not going to be a good thing, but we could start to see people not saving as much and putting more money into the stock market, which is going to help investors as well. That is one possibility. But what about people who are looking to buy a home? Now, the thought was, right, we've seen interest rates for mortgages creep up near 7%, which is high. It's extremely high for people in the last 20 to 30 years. It's not something that most people have been used to. But here is a problem, and is the near exact problem that we saw in 2020. Housing supply has not drastically improved, okay? Housing supply has not drastically improved, and you have millions of people, myself included, who bought homes at ridiculous low interest rates at 2% or 3% or somewhere in that range, who aren't looking to sell. So what is going to happen when you start to see interest rates come down? People are going to go back and try to buy a home, and the market isn't really moving, because people like myself, if I sell, why would I sell and then go pay a higher interest rate? Even if interest rates come down by 2%, it's at 7 now, it goes down to 5, that's still more expensive than what I'm paying now. So where would I go, right? Where would people in these scenarios go to go from point A and pay even more? For what reason, right? Especially for those who bought very recently. So I'm not sure that's going to be the best thing. What we did see in the last housing cycle between 2020 and 2021, and we may see now as interest rates start to drop, if interest rates start to drop, especially between 24 and 25, then you're going to see people start to overpay yet again for houses. And that is something that happened across the board, where you saw companies like Zillow really bid out people. You saw a lot of hedge funds and other very wealthy investors buy up homes. But also on an individual level, you're going to start to see people paying $10,000, $15,000, $20,000 over just to get into that house, because interest rates are lower and because there is not enough supply. The only way to fix that is to build more homes. And that is a local political issue that you have to solve by you talking to city council. And that's because we have far too many parking spots, which I know in some cities sounds ridiculous. And then you also have a lot of zoning laws in which some communities don't want you to build single family homes or even multi-family homes, which throws off the supply and demand factor here. Now, the other side of that is if you own a home, the value of your home could go up because, again, supply and demand here. So it does go both ways. I don't know how that's going to play out in 2024, but I would suspect that if you have to buy a home, do exactly what I was telling you earlier. You should be saving aggressively to prepare for what may happen in 24, but I will also urge you to continue to be patient because, again, one, they said they could cut interest rates, okay? We don't know if that's going to happen or not, but we'll lean towards a yes. They also said they were going to raise interest rates one more time before 2023 was over, and it didn't happen, right? So they are watching to see what's going to happen with the economy, and they're going to make a decision based off that. So you should continue to be patient because as they cut interest rates, it's going to be less expensive for you, but also there's going to be even more demand. And the expectation initially before this announcement was they're also going to cut in 2025 as well. So again, save aggressively as much as you can and strike when the iron makes sense. Not when it's hot. Not when it's hot. Strike when the iron makes sense so you can get the best absolute deal that you possibly can. For investors, again, continue doing what you're doing. I think tech is still going to make sense. Don't only invest in tech though. There are other areas that you do want to pay attention to, and it seems like retail is one of those areas, and we've talked about that inside our members only as well. If you're looking for more investing ideas and tips, then these are the videos that you want to check out next.